Listening to Real Estate Roundup. Real Estate Roundup with Realtor Nagaraj Annaiah every Sunday from 12:30 p.m. to 1 p.m. PST on Poly 92.3 FM.
Hello, Bay Area. Happy Sunday. I'm your host, Nagaraj Annaiah, the Bay Area Realtor. Today, I'm joined by Tony Hong, the CPA dude expert. If you would like to save more on your taxes, if you would like to know more about how the real estate going to save your taxes, this is the show you should never miss out. Hello, Tony. Welcome to the show.
Hey, happy Sunday, Nagaraj. Thanks for having us today.
Happy Sunday to all the listeners around there. If you have any questions, do give us a call. Our studio line numbers are 877 Bolly 92. And if you like to know how to build your wealth, this you should never miss out. Give me a call. Anything on the tax related. We have an expert around there. We'll be discussing a lot of things on the tax related and the real estate related. How both go hand in hand, Tony, right? Like both tax and the real estate goes hand in hand a lot.
It's one of the best ways, and it's how the tax code's written. Real estate is the big way, and it's also one, how you save taxes, two, how you build wealth.
Yeah, it's always the real estate. Good thing about the real estate, right? It is not an immediate stuff, but it slowly keeps on adding after you look back after 10 years. Wow, I've made so many things from the real estate.
It's a ton, and then also you look at your pocket too. I'm like, oh, I got some extra money now, not from paying Uncle Sam and not overpaying on taxes also.
Yeah, this is not only slowly, it's kind of a slow poison, real estate is always, but it makes a lot when you are at the end of the day, if you have made a right choices always. So
Exactly.
first let's talk about the tax dues. If somebody had missed their by April, right? When is the tax dues for the business and when is the tax dues for the personals?
Yeah, it's coming up really soon now. So business returns, so multi-member LLCs, S corporations, that's going to be due if you extend your return 9/15. If you don't file by then, you're just going to be penalized, and it's pretty ugly. It's a couple $100 per partner per month. So it gets really ugly on the penalty side.
Huh?
And then personal returns, 1040s and 1120s, so C corporation returns, those are due October 15th if you've extended that. So once again, if you don't file those, then the penalties on that is going to be a percentage based off how much you owed. So you have penalty and interest. So time to really get it in order if you have not filed your taxes yet.
How much is the percentage? Is like especially like it's 5-10% depending on how they owe it, right? It's going to
Oh
be
yeah, so many, yeah, 20 up to 25% failure to file based off the amount owed. So it accrues each month. And then you also have interest, and interest is usually, 7, 8%. It goes with the market. It adjusts each quarter. So 7, 8% on that balance. So it really adds up. Penalties, you can sometimes get it waived. We call in for our clients and we're like, oh, hey, Bob just missed it. Something died, someone died or something. They may waive it. And we've had some good success there, but interest, they never waive. So interest is always due.
yeah, listeners, if you file your taxes, fail your tax, file your taxes. This is a time you should never miss out. It's like September 15th and October 15th, the time to remember. So it's easy to remember. September 15th, if you're not started, do give us a call. Do give a call to CPA dude, and they might help you out on the tax filings for this year. But 2024, if you have filed for tax deadlines. But now, very important topic. A lot of people, especially I've get a lot of calls on the bonus depreciation factors, right? And it made people to think about how that bonus depreciation works. That's why I want to keep every show. I would like to keep talk about the bonus depreciation because a lot of it's a complicated topic, especially bonus depreciation. If they don't understand it right, it becomes very hard for them. So let's touch upon on the bonus depreciation, how it can help if somebody is buying an investment property. Let's talk about the scenarios like a W2, non-W2, so that way people understand better, Tony.
Yeah, yeah, you're right. Yeah, bonus depreciation, it's a deep, thick topic. But with the new tax law change, I'm still celebrating from July 4th, but it passed July 4th, so we're just under a month here. But it went back to 100%. So what that means for, let's just say W-2 person, you buy a home and you can even house hack it. You don't even have to use it as investment property. You still use half-half, right? So if you want to live in the home, rent out the other part, what will happen is that you will be able to depreciate, which means you can take a huge loss on that property against your taxes and reduce your taxes if you do the short-term rental loophole,
Mhm,
even if you don't pay for it. So say you buy $1 million home,
mhm,
you do cost segregation, bonus depreciation, you say maybe you get $250,000 of a deduction And let's just say you even just did FHA 3.5% down.
Mhm.
$35,000 out of your own pocket for a $250,000 deduction. And this is how you win the tax game, is that you're using loans, leverage in order to set income and deductions against your W-2 income and save a lot. So if you're generating a $200,000 deduction,
Mhm.
say a 30% rate, anyone in California,
Mhm.
right there you have it, 60 grand, right? Just like that.
Yeah.
So this can add up really fast. It's like, would you want to give the government $60,000 or do you want to keep $60,000 for yourself?
Yeah. So basically, previously the depreciations were at 27 years. A lot of people just go blind, do a 27 years depreciation on investment properties. Instead of that, the beauty of this is like you buy investment property, let's assume it's a 200K is your uh, house value, like cost segregation, it comes out. Like cost segregation is the amount to build or amount to what is that cost segregation means here? So that a lot of people doesn't understand, they can know more about
Oh
this.
yeah, yeah. So the IRS, they think an investment property, the whole thing is going to last 27 and a half years or 39 years if it's commercial. But we all know if you've had a rental house before, even you use your own home, the floors don't last that long, the cabinets don't last that long, the appliances don't last that long. So what a cost segregation does is that it puts it in these little buckets. Those buckets are 5-year property, 7-year property, 15-year property. And then cost segregation with bonus depreciation lights it all on fire. And you can take all of that as a deduction in the first year that you bought the property, even though it says that, hey, you're supposed to depreciate this property over 27 and a half years, but now you stripped it down into like 5-year property. So instead of doing a very slow burn, you're just letting it all, you're almost throwing like a bomb at it. All your taxes just get wiped away essentially.
Okay, so that's really a good thing because for them, instead of wait for 27, go get it immediately. So one more thing is, can they do every year buy an investment property and they qualify for a bonus depreciation year?
Yeah, yeah. So as long as you run the short-term rental loophole or you have real estate professional status, one of the two, you can buy every single year and it'll offset all your active income. So business owners, this applies to also, right? We have a lot of restaurant owners where they're making a lot of money from the restaurant. Hey, let's go buy a property. The spouse stays at home. And then boom, we take those real estate losses, offset the restaurant income. They pay nothing in taxes. Same thing for, hey, if you're working NVIDIA high W-2 or doctor high W-2, spouse stay at home, manages rental portfolio, takes care of the children, and then boom, run the same strategy, pay barely anything in taxes, or at least reduce it. Instead of being at the 37%
Yeah,
bracket, even if you get down to the 22% bracket, you still save
it's a
15% on
lot.
taxes.
It's a
Yeah.
lot, I tell you. Listeners, myself, Realtor Nagaraj Annaiah, I'm talking to the Tony from the CPA dude. We're discussing the ways and means of the saving the tax the better way with the real estate. If you have any questions, do give us a call. Our studio line numbers are 877 Bali 92. And if you would like to pitch in to share some about the things about the taxes or real estate, also is more than welcome. So it is like one thing what we discussed about wife not working or like this partner not working. But what about the scenarios where both husband and wife working on a W-2? So they qualify for a real estate rep or how's that works for them to qualify for this?
Oh yeah, so if both are working, then you want to do the short-term rental loophole. It's the best one for you here because real estate professional status, one of the tests is say over 50% of your time. So if you're working 2,080 hours, I don't think you want to work 2,081 hours and not have a life. So just do way easier. You only have to work 100 hours or maybe a little bit less.
Mhm.
So the short-term rental loophole, what that would be is that you have to have an average stay of 7 days or less. So just put on Airbnb, don't have super long stays. It's the average of the whole year,
Mhm.
right? Total days divided by total stays. Then from there, you just have to do, what material participation. The easiest ones is 100 hours, no one works more than you. Or there's another easier one, the secret one here.
Mhm.
It's actually you substantially performed all services. So say you buy it today, put it in service in December, you can't meet the 100 hours, but you did everything from the gas to the cleaning to the setup, you'll still qualify actually. So don't be scared about the 100 hours depending on the time. And this is why planning is so important. So if they're both W-2, it'd be great for you to use the short-term rental loophole.
I think this is a great time for somebody to buy an investment property also, right? Because the prices are
Yeah.
going down. and the W-2 incomes are high, and it's only 4 months to go, like not even a 4 months, 5 months, right? Because the time of the closing, it would be from August to August, and then September, October, November, December. So 4 months to go for it. Just a 4 months to go for it. In the 4 months, you can put it for a short-term rental loopholes, short-term rental managements, and the next year convert it to regular rentals.
Yeah, whatever you want, you as long as you get it in for this year, you'll get that big benefit. And then it like you can do the mixed use too. Like some people are like, oh, this investment property, I want to buy my primary home first. I'm like, don't worry about it. How about this year? You just house hack it a little bit, right? Just live in a little bit part, or don't live in it at all. Just rent out your lease till next year, rent it out this year, and then maybe house hack it next year. So you gotta get creative with it. So I don't want like the excuse of, hey, let me buy a primary first, then I'll do investment
Yeah.
unit. Like these are excuses to give more money to the government. Just house hack it.
I think let's talk more about house hacking. A lot of people might not even know what is house hacking in terms of what we are talking about. Okay, let's.
Oh, yeah, yeah.
I think let's talk about what's the beauty of house hacking also here.
Yeah, yeah. So beauty of house hacking. So house hacking, simple terms, you got roommates, right? So or you got strangers living in your house. So if I were, buying a new house, say if I bought a 4 bedroom house and I'm just gonna live in one and I'm gonna Airbnb the other 3 bedrooms, then I can get up to 75%, 3 out of 4, of a deduction against my taxes from the interest, insurance, the repairs, everything, and run the short-term rental loophole. So you got some strangers. So that's if you buy one house, maybe doing duplex in-law unit, but the bigger one would be even better is an ADU, right? You could live in the main and then in the backyard, just get an ADU up now. ADUs are pretty cheap for California,
Yeah.
right? 200 to $300,000 for anywhere from an 800 to 1,200 square foot home. That's crazy. Sign me up. I'll take that any day.
Yeah, I think see these are the things a lot of people needs to understand, especially if they're moving to US or like somebody is like staying out, just paying W-2 incomes, just paying a taxes. They have primary
Oh,
residence. No, I'm fine. But dude, like you can just get a 1 million with a 20% down, or yeah, 20% down. You can do all these things, or if you don't even need to do all this, just do a house hacking or like maybe even ADUs. What do you say? That makes a
yeah,
lot
yeah.
of difference.
Oh, it's huge, ADU, and then even if you want to go slower, I got all the options for you. You just have to get creative here. Is just turn your garage. Your garage is 400 square foot already, right? You just convert the garage. You don't have to talk to these strangers, right?
Yeah. Convert your garage. That's also one of the better way to do it. Convert your garage so you can get your get something. That's just for Airbnb, right? Anyhow, it's only for few
Yeah,
days we'll be doing it. It's one night, so few nights you need to be renting out for Airbnb.
yeah, easy. And then the other part too, these are just all the tax benefits, but the big thing we always got to say, don't put the cart before the horse. You get passive income,
Yeah.
right? Would you not want an extra $1,000 or $2,000 every single month? Like, why not? You have the space, or if you're strategically buying, right? Like, contact you, right? Like, all these strategies too. This is where I learned it from too. Is like, hey, there's different ways to have this either one, pay down your mortgage, or even have an extra $1,000. Hey, let's go get some extra DoorDash. Let's take the family out. Just some extra cash for using the existing space you have. Is just that rather just use your garage as storage? Like, no, we should, be a little bit more strategic.
Yeah, no, I think it's again depends on a lot of people when they're buying the house. They think, hey, $1,000 more, blah blah blah. I can't get buy the house. They're qualified, but they think it's my monthly $1,000 more. No, no, I can't qualify and I don't want to buy. But if they can get a passive income like this, it will offset the payments.
Yeah.
It
Hmm.
makes a lot better. And I think one more thing is recent law change has benefited a lot of people, especially it is a SALT thing, right? Like where basically where they get a up to 40K credit if you're less than a 500K income. You can write
Yeah,
off
yeah.
taxes.
So yeah, state and local tax cap now. They before previously, you're stuck at $10,000 for income and property taxes. Now, if you make $500,000, you can get up to $40,000 of a deduction. So that will put at least a few $1,000s back in your pocket, right? So 30,000, say I just take it once again, 20, I'll just say 25%, really low and conservative, right?
Mhm.
Extra $30,000 times 25%, $7,500 extra you'll have back in your pocket now because of the tax law changes and if you know how to use it.
Yeah. Listeners, myself, Realtor Nagaraj Annaiah, and I'm talking to Tony from the CPA Duke. Any questions on anything on the Bay Area real estate? tax related, how to build your wealth, this is the show you should never miss out. If you have any questions, do give us a call. Our studio line numbers are 877 Bali 92. Each and every recordings will be uploaded on my YouTube channel. If you want to hear back again slowly what we are talking about, some of the terms, if it might be confusing for you, do watch out there also. So that's a beauty of that the Sol thing, right? Like I had a one question in the 500k. The 500k income, is it before taxes or like or after taxes? How does that 500k is calculated? It's this
Oh
500.
yeah, it'll be adjusted gross income. So you have to add up your W-2 plus your interest, your dividends, and any other income. So that's adjusted gross income. So before taxes. So it's up to $500,000. Then it slowly starts going down as you make more. And then at $600,000 or above, it'll be down to $10,000. However, this is where planning comes into play. Adjusted gross income, like I said, is wages plus other income or other losses. So what you want to strategically do is to say you make $700,000. Now, how through tax planning can we get that 700 down to 500 so you qualify for the full 40? And then that gap here is real estate. Buy a piece of real estate due to short-term rental loophole, cost segregation, bonus depreciation, 700 down to the 500. And now you have an extra $7,500 in your pocket at least. But if you're at that bracket, you're at 37%. So we're talking about 37 times 30 grand now, well over 10 grand. So now that the payments are the furnishings, whatever you want, you have an extra $10,000. Go take a vacation. I don't care, right?
No, because it's easy, right? If it's 700, get your like basically all this bonus depreciation, bring it down to 500. It's just all about the numbers. How do you do the numbers is very important.
Yeah, exactly. And there's just so many ways. It's like just don't think because like, hey, I'm W-2, there's nothing I can do. Yes, you are limited. I'm not gonna lie, but there's still options out there, right? That you can do. I've had W-2, I had a W-2 guy that the company went public, and then he's like, dude, I got so much extra money. I don't want to pay the social taxes. I'm like, all right, what are you into? And then we bought a crypto miner, 179 bonus depreciated that, and we bought a BMW X5 and bought a house that year.
Yeah.
It's just like, hey, anything and everything to reduce it down. Why give it to the government? Like one thing my dad taught me when he had a restaurant
Mhm.
was he rather go buy equipment or things to increase his business to make more money than give it to the government, right? So I saw growing up with all the farmers. I grew up in Minnesota. All the farmers on a good harvest season, they all have brand new trucks, right? Buy $100,000 truck or pay $50,000 in taxes. Pick your poison, right? The $100,000 truck after taxes is still $50,000,
Yeah.
and that truck is going to haul and more machinery and equipment to do their job better. So really get more strategic with the taxes is very important.
And the right way, then the right expert needs him, right? Like that's where like you can guide them. So listeners, myself, Realtor Nagaraj, and I am talking to Tony from the CPA dude. We are talking all the ways and means doing the right way for saving the taxes and how the real estate can be the vehicle to help you out on the saving the taxes. But one more thing, right? Like we talked about all this, but how this putting a solar on your house right now? I think there were some recent law changes on the solar things. How is that going to happen?
Oh yeah. If you have ever, so if you don't listen to anything I say today, this is the one thing I need listeners to take away. If you have ever wanted solar, you have to do it right now. Like no ifs, ands, and buts. The reason why is because at the end of this year, so you got 5 months to get this done with permits and everything too, the 30% tax credit is going to go away. And once it's over, oh, solar's not that good of an investment anymore. So I do a lot of tax returns. I see it anywhere from 30 to 80 grand, right? So if you buy a $50,000 system, the government is giving you $15,000 as a tax credit, one for one reduction. That means that solar system is only $35,000 out of pocket. Then just go get a HELOC or a 15-year loan. And then instead of paying PG&E, just go pay the bill instead. And then after about 12, 13 years, depending on the break even point, then it's all free. Now, here's a bonus one for you here is if it is a house hack or investment property, you not only get the solar tax credit, you also get bonus depreciation. So you get the 30% tax credit. So I'm using my $50,000 example. You get $15,000 tax credit. Now I'm going to run bonus depreciation on $35,000. So then say I do at least 30%, that's another 10 grand. So my true out of pocket is only 25 grand. I've gotten the solar system for half off now. So my payback period is only going to be like 7, 8 years. I was talking to a client, their PG&E bill was like $600 a month. And
What
I
can
was
you talk
like,
about the PG&E bills nowadays? Like it's how it's coming out. It's so becoming
uh-huh,
expensive. If you don't have a solar in San Jose or somewhere else, I think if you're lucky to be in a Santa Clara, your bills are less. If you
uh-huh.
go out of Santa Clara, the PG&E bill kicks off. Then you it's so high. I'm telling you. If the listeners have not done anything on the solar, there's a time to think about. This is the right time. I can tell you.
Yeah, yeah. I literally, I was talking to my neighbor. They're putting the solar battery in now, and then we're in HOA. They have to do a petition to sign. So I signed. I was talking to him, and then I was like, okay, I think I'm gonna do it. Like even though I didn't want to, but it's just 30% off. It's too good of a deal to ever pass off.
Yeah. That's a good thing. So what about the business owners benefits? Like if somebody is in the business related activities they're doing in, right? What are the benefits they're going to have right now for the business owners?
Oh yeah, business owners right now with the new One Big Beautiful Bill Act that's passed, you want to take advantage. This is for my multi-member LLCs and my S corporations. You need to take advantage of the QBI deduction, the qualified business income deduction. This is a 20% deduction on your business. So say if you make $100,000, you get $20,000 of it. But there's special limits to this. If you make too much, more than 200,000, then it's limited to your payroll. So what you want to do is you want to strategically plan out your payroll. We usually use this rule of 2 out of 7, and then you're able to get the maximum amount. If not, you're putting money on the table and just once again flushing away to the government. These are deductions you are 100% entitled to. You will never get audited for these deductions. It's literally black and white in the tax code. The main issue, though, is your $500 tax preparer every year that you see once a year is not telling you this because they don't have time to, right? I was back in that position years ago. You're so busy doing tax returns. I don't got time to talk to you, Nagaraj. I'm sorry. I love you, man. You're a great guy, but I don't got time. I got to get all these returns done. So they're kind of doing you a disservice by don't have enough time. But at least they're listening in to the show, getting more educated, learning how to build wealth. Is
Yeah.
there's all these things that are black and white in the tax code you need to take advantage of.
Yeah, they're doing the right way. That's what I keep telling on this show. It's doing the right way on the taxes or on the real estate. But one more thing is like, let's assume like a charitable contribution, right? Like, how is it going to benefit? What's the limit for the charitable contributions? Can somebody walk away with the charitable contributions? What's the limits for that?
Yeah. Yeah, so previously, charitable contributions only helped you if you itemize your deductions. So unless you really owned a home, you really didn't itemize deductions because the standard deduction is so high now. So I used to have clients be like, "Oh, hey, you got my charitable contributions," and I'm like, "Hey, bad news. Like, I put them on your tax return, but it's not helping you. So you only gave out the good of your heart. So good thing you love that organization." But now with the One Big Beautiful Bill changes, if you're single, you can do up to $1,000. Married, do $2,000. So if there's organizations or, schools or churches or anything you're very passionate about, those donations will finally help you. It's an above the line deduction. There's a small cap of 0.5% of your AGI, but those are the nitty gritties. But finally, all the deductions, when they do ask for them, they will help you on your tax return now.
Yeah. So I think that's why, like, one more important thing we last time also discussed about the Trump accounts for $1,000 for each kid. How is that
Yeah,
going?
yeah. Yeah, so any newborn, the government will give you $1,000 first,
Yeah.
and then it works just like a traditional IRA. Other folks can put money into it. Your employer can also put $2,500 into it. So as Eldar said, go ask your employer, HR department, hey man, I got a new kid, I need $2,500 in the account. And then that way it'll grow all tax free. And then when they take it out, then it'll only be taxed at capital gains rates, not ordinary income tax rates. So a slight tweak that's a little bit better. But this is a small carrot, as Eldar like to say. It's only available for the next few years,
Yeah.
but it's a great time to take advantage of it. But one elevated version of it is actually just income shifting with paying your child, right? So if you have a child, you have a business, or you have rental real estate, you take the kid to go pick up trash. What I had to do with my dad, I used to carry all the drywall and sweep and everything. Just pay the child, right? If you have to go pay a handy person 25 bucks an hour, That kid's out there with you for 8 hours. That's $200 a day. Do that, what, 8 times a month, right? On the weekends. So they're all going to do is and they're going to build work ethic. We're talking two, four, right? There, I got 4 times 4, $1,600 a month. That's legitimate. Like no shady random tax strategies. These are all real strategies because you go find a handy person, they're gonna cost you 25 bucks an hour at least, right? So this is a great way why to have rental real estate is to set your kids up not only wealth, teach them hard work and that, and also save money on taxes.
We'll discuss more on the coming episodes, Tony. We're running out of the time. If somebody wants to reach out to you, what's the best way to connect with you?
Oh yeah, if they want to connect with us, the cpadude.com, that's the website. You can book a call. Anyone that comes from this show, we'll give them a free tax discovery session. Then number 2, Instagram, the cpadude _. And then also if you just want to text our company hotline, 254 CPADude, 254 CPADude. So everything is the cpadude.com. So just find us there.
And if you want to connect with me, myself, Realtor Nagaraj Annaiah, go to nagarajhomes.com, click on a WhatsApp icon. Today's whatever we discussed about bonus depreciation, house hacking, all that needs and helpfulness that you need to connect with me. I have a new listing coming up in 1025 Lido land. It should be in a Foster City, 2-bed, 2-bath. Do you want a house which is facing a waterfront? This is the house which it would be. It's a great neighborhood, great HOA, and all the great views of the Foster City. If you want to know more about this, do give me a call. It's easy to do it. Go to nagarajhomes.com, click on a WhatsApp icon, and easy to connect with me. Thank you so much, and have a wonderful day, listeners. Thank you, Tony.
Thanks, Nagaraj.
Price your business product